Hey guys, Mike here. So, about what a day on Friday, and it really leads into our first question, which is something I'm going to show you that you can absolutely, it's not just for trading, it's also investing. Like these indicators, when you look at them, you say, boy, I really want DCAN up at this level or down at this level, right? And it's free. I think even TradingView in the free version has it. I'm sure other places have it for free as well. Also, we'll go into, is there rotation into energy? Maybe, maybe not. We'll see the charts, see what they say. Also some 401k questions and a few others. And these are questions I don't think we've talked about before. I'm trying to filter out the questions to where it's not repeat after repeat, because I know what some of you guys say, and trust me, I feel the same way. And so those questions I would just answer in the comments by myself. But feel free to participate. Again, we'll set up next week, which will have a normal week finally, going into next week after the big rally on Friday. And we'll talk about all those charts and what happened and why did we stop where we stopped at. It's amazing. But first one here, I asked, wouldn't a high percentage of stocks below certain moving averages technically be bullish with more room to the upside? I guess I'm contrarian and think long term, but for a longer term investor, rather be buying stocks will be below moving average instead of when 80% of stocks in the S&P are above the 50 or 200. Again, different outlook than someone who does a lot of trading. And the answer is absolutely. And this right here, again, it's in TradingView, but when you look on this, this is a percentage of stocks above the 50-day moving average. I do the 50 and the 200 in the morning news brief for the S&P. But when you're below this line, that means that's the percentage of stocks. Like 17% of stocks out of 502 stocks are below their 50. And when you're up there, 80 to 90% are above their 50. These are called the extremes, right? So in one area, if you're trading, you probably don't want to be in calls if it's way up high, and you don't want to be in puts if it's way below, and you probably don't want to be DCing in as well, or pick your spots, right? This right here is above the 200. You can see we broke that trend over to the right, but when you're way down here versus way up there, it's just different, right? And where have we been? We've been in the gutters. I've been saying over and over and over. Also, look at the VIX, right? VIX divided by VIX 3 months, what I like to see. When you're down below in that shaded area, okay, and when you look over at your percentage stocks above and they're really high, 70, 80, 90%, something's probably going to happen, okay? It doesn't get it to the exact day or week, but something's probably going to happen, okay? Stocks above their 20-day moving average, stocks above their 5-day moving average is where you want to nail it down and really look and see if all of these are below this white line or above the white line. And if they are, you can bet money something's about to happen. And so where have we been? We've been in the gutter, okay? And that's why you saw something like Friday happen. And so, yes, that's indicators you need to use, look at. Again, they may be in the free TradingView version, I don't know. But find them somewhere and just reference them or subscribe to the membership. You'll see them every day in the morning news brief and have a good idea. Now, next one here says, are you noticing a rotation into energy stocks? They have been really beaten down. And yes, they have definitely been beaten down. See a little rotation, and what I'm looking at here is XLE divided by the SPY, right? You can see 1, 2, 3, 4 days, a little red on Friday there because tech was just taking off. And so, yeah, you see some rotation, okay, because, yeah, you're right, they've been beat down. And so when you look at this, again, this is what's been going on since 2022 right here. Just coming on down. When they break above that trend line, that's when you really know you have a true, real big rotation into them. But they're getting some love, right? And when you pull up US oil, for example, this is another one. You pull this up, it's starting to, it seems like it wants to try to break out. And we'll talk about maybe why and what could, push at least our energy stocks here in America higher, which we're going to talk about in a minute. But when you look over at XLE, you can see with this trend line here, it's coming into resistance now, which was support going back to 2022, right? So now you're going to end up with a trend line resistance coming up. You're going to end up with horizontal support right there, and we'll pull up our VRVP, volume range, volume profile. It's just an indicator. If you don't know how to look and say where is actual support and resistance at, you can pull this up and it gives you a good idea of where the volume's coming in at. And so you can see right there, yeah, it's sitting there at resistance, right? It came up very quickly, right? Why? It came through a gap, a volume gap. You see down below, it held that support. And so right here in this shaded area, if it gets through this, gets through that trend line, then you actually absolutely can say, yeah, we got a good breakout going on. And of course, we got to look at XLE, right? What makes it up? It's dominated by oil stocks. Look at this, 35%, 2 stocks, ConocoPhillips, Williams and companies, like 5 or 6 stocks make up like 60% of XLE when you look at this. But also, we'll go to oil stocks like XOM here, right? Exxon. Boom. It's on trend line support right there. It's bouncing, so it's holding that right there. If we come over, you can see where it used to be support, which is now resistance above it. But if we go over and look at Oxy, for example, you see it's right here. It looks like it's trying to break out, still has not. Warren Buffett used to buy up at that shaded area. Now he's underwater, right? He's probably buying down here for sure. And then when you go over to Chevron's, another one to look at, looks like this one. I mean, it's holding support. Really is what you can say about Chevron. It's holding support every time it comes down this area. Since 2022, it has gotten a bounce. But the other thing, at least get these energy stocks going in America, is what President Trump announced. He's going to try to threaten tariffs on Europe if they don't buy more oil from us versus buying it from like Russia and others. And so if that happens, and all of a sudden demand picks up a lot for our oil in this country, yeah, that could absolutely raise prices, could get the stocks going like crazy. And so that's another thing. I don't know if that's being a front run right here. Again, I don't deal in oil stocks too much. So if you do, let me know what you think and stuff. I know, but looking at the charts, it was like it's a possibility. And so we got it on watch, right? So again, if you're big into oil stocks, let us know what you think on that. Now, next thing here from Dr. Marcus says, what's the difference between buying different companies' versions of the SPY ETF, like VU, FX, AIX, which is Fidelity, Vanguard? VU is with Vanguard. Is it just an expense ratio? Why would someone choose one over the other? Well, let's look at these real quick. There's a couple reasons. When you look at the makeup, I want you to look at the price and the percentage of the top 10 holdings. $591 for SPY, top 10 holdings, 34%. Look at them. Apple, Nvidia, Microsoft, no surprise, the Mag 7 pretty much. Okay, we come over here and we look at Vanguard, $544, a little bit cheaper. Look at the top 10 holdings, 34%. Wow, look at that. Looks like the exact same stocks. Some of them may be in a different order. You come over here, Fidelity's 500 index, which you asked about, $203.74, cheaper. Top 10 holdings, looks like the exact same thing. Tesla dropped on this one, and one of the others is higher. And so when you look at this, to me, the reason why people will choose one or the other is one, simple preference. Where is your money? If you have a lot of accounts with Fidelity, a lot of times they'll just go with Fidelity. If you have a lot of accounts with Vanguard, you're going to go with Vanguard most likely. And then there's some people say, look, man, I'm just buying the SPY because that's just how I do it, okay? Because the expense ratios aren't that different. Even the dividends you get aren't that different. Another reason, though, I've heard people talk about is like for the Fidelity one, right? If you're putting the same amount of money in all three of them and the returns are, let's say, pretty much comparable, maybe they're 1 or 2% off, maybe, who knows? But let's say they're really comparable, almost identical. Some people look at Fidelity and they say, I can pick up more shares for that amount of money. And so if we get a run up and I look over here and I want to put some money over here, I don't have to sell out the whole position because now I have like twice as many shares. I can take about half that money and put it somewhere else. So some people would do that for flexibility of just taking profit and putting it somewhere else, right? And so that's really the only two reasons I can come up with, the reason why they would do that there. And so if you got a better answer, let me know in the bottom for sure. But it makes sense to me. Now, next one here says, hey, Mike, what are your thoughts on the ETF MAGS, Megatech stocks? For those who don't know what MAGS is, and the other three stocks will surprise you, but it's one who holds the MAG 7, but they actually have 10 stocks in here. You see the weightings, right? So I think it's 70% or something in the MAG 7. But when you look, they actually also hold the United States Treasury bills, Affirm, which is an odd one, and JP Morgan. I think those make up 20-25% of it. And so, that was interesting to find that out. But that's what MAGS is. And when you look at the stock chart, you can see it's had a good year because it rode it up, right? And so a little bit of diversity with the treasuries, a little bit of diversity with JP Morgan. Obviously, FinTech's been on fire. So that's been good. You can see the volume over here. It's not like you're buying into SPY or you're buying into Tesla or whatever. Volumes are much lower. And so as long as the MAG 7 are doing good and JP Morgan, all that stuff, you were doing good. But what it does is it keeps you, let's say, for example, what do you see in the MAG 7? A lot of times you'll see where they're not going up at the same time, right? You'll have like Tesla's going down, Nvidia's going up, Meta's going up, Apple's going down. So let's say 4 going up, 3 are going down. Let's say JP Morgan, which is the biggest bank out there, is having a good time. Treasury bills don't really move, so they're doing good on that. Then you're shielded from a huge amount of volatility by getting in this versus if you just happen to pick 2 MAG 7 stocks and you pick the wrong 2 when they have a bad year, then you're getting crushed, right? So I don't mind it. It doesn't bother me or whatever. And so, feel free. I've never bought it. And so please let me know if you've bought this one before and you like it or not. So next one here says, Mike, what steps would you take to prepare your 401k and other investments for the possible volatility after January 20, 2025? What are some safer stock options? A large proportion of my investments are in the S&P 500. And I'm assuming you're saying you're in the SPY, or you're saying you have stocks within the S&P 500. If you're in the SPY, you're already diversified, which is good because, one, they have so many different sectors. Unlike being in the Qs, if tech takes a massive hit, you're in the dumps, right? But right now, let's say oil gets picked up, financials, continue to do well and all that good stuff. You're not going to, have to suffer that huge drawdown, which is why the S&P, when you look on the long-term chart, just keeps going up and up and up with, corrections and a couple crashes here or there. But, looking at it for 401ks, especially, you got to remember, your investment vehicles are limited in a 401k versus, say, a Roth or something else, okay? And so, but the biggest thing you can do, fixed income. That's a big one, right? Because 7% may not seem like a lot, 8%, whatever it is you're able to lock in. But if the stuff hits the fan at some point in time, then that 7 to 10% looks really good if you can find that. All right, so that's one you can do as well. Again, look at rotation. What's getting rotated into? When President Trump comes in, there's going to be some stocks, as Tom even said it, it's going to do really well underneath him. And you just look, you just take that sector, divide it by the SPY. If you see that rotation up, just like when you looked at XLE here, okay, then that's the stocks you kind of want to drift towards. All right, that's what you want to look at. Now, of course, you can't control what's going to happen in the bond market. You can't control, debt and everything else. And if something's going to happen, and obviously, that kind of stuff, you're not going to be able to control. You're not even going to be able to predict it. I mean, people have been predicting the market crash for 2.5 years now, and that still has gone to the wayside. I should say, I'm sorry, 2 years, 2 months, right? The 2022's crash was supposed to still be going on right now. But it wasn't. And so we've been in this raging bull market. But, if it happens, it happens. So that's what I look for, fixed income, and then look for what's getting rotated into after he takes office and after you get to see what he's able to get past and what he's going to do. I think that's a smart way to go about it. Now, next one here, which it's a pretty good question here. It says, random dumb question. It's not a dumb question at all. Are there any heavy volume ETFs and leverage or not that trade specifically with a direction of the U.S. dollar? It comes to leverage. I actually couldn't find any for the dollar. I did find an index, and I found leveraged ETFs for the euro and the yen. But there is, and I didn't check the volume on these, but Invesco, DB, US dollar bullish, UUP, another one's USDU, and another one is UDN. One short, obviously, and then the other two are bullish when you look at that. And then when you come over here, there is this right here, the S&P US dollar futures 2x leverage daily index. You can try that one and look at that one as well. But yeah, that's the only ones I found. So hopefully that helps out, and good luck. Let me know if you actually follow through with any of those. Now, next one here says, appreciate all the great consistent content, especially the upcoming government data releases. A Saturday question, does TradingView or are there other services which have same info for other countries' data releases and their times the futures market could be affected? China, Europe, and why is this never news about India economic events? I don't know why there's never any news about India. I just don't know if it's not big enough or whatever. But yeah, you go into TradingView here, for example, and I'm sure there's others you can use, and you come down to the right, and you click on that right there. It says calendar, and when you click on it, and we'll bring this out so you can see it, you can pick whatever countries you want. You can pick whatever data you want to put on there. You see all the different flags? That's all the different countries. Again, to the right, you'll see the categories, and so you go over and click categories, and whatever you wanted to put on here, bonds, housing, labor, whatever. And then, of course, if you want to pick the country, you go right up here to G20, and then you scroll down and you can pick your country. And so, and yes, by the way, other countries' news affects our futures. All right, there's a reason why there's an Asian session, a European session, and then the Americans, okay? So we all come online at different times because we all go to sleep and wake up at different times. So yes, I don't know why they don't talk about India. Let me know if anybody knows the answer to that question though. Now, last one here, which I don't have the answer to. I tried, couldn't find it. Mike, I was wondering if there is a way to see the amount of leverage that is being used in the market. And I don't know a way. I looked, I Googled, I never even thought about trying to track it in the first place. Do you happen to know one? Because in a way it would be good, right? Because if you saw like, if there's like, same way with those percentage of stocks above their 50 or below their 50 moving average and all that good stuff, if you could find a way to track leverage in the market, overall market, and you saw it was up at this line and way up here where it don't need to be, that would give you a warning, right? And if it's way down below, you kind of go, oh, and you saw leverage starting to pick up, then you have an idea to go, wow, maybe I need to start getting back in the market. So it'd be interesting, but I Googled, I didn't see anywhere any tool that tracks. I don't even know really how, because leverage is done on so many different ways in so many different markets around the world. But it would be a good one. It would be a good one. So Jeff, hopefully they find something for you in there. So please help Jeff and the rest of us out and put in the bottom how you track leverage in the market, overall leverage, that is. So it was really good questions. I actually enjoy those for sure. Like I said, it's one of my favorite videos to do because I get to learn stuff along with you, because some of the stuff I have to look up and research myself. So, hope we helped you guys out. Feel free to put any more questions for next Saturday's video. Really appreciate it, guys. Again, we'll set up tomorrow's video for the week, of course, see how we're going to go. And we got a boatload of data hidden, especially job data. So it's going to affect the yields all over the place. And so you're going to see the market react for sure next week. And volatility will continue. We'll definitely say that. And we'll see if we get a follow through from Friday's move. So hope you guys enjoy the rest of your weekend. Please hit the like, subscribe button on the way out. Think about signing up for the membership. Less than McDonald's combo. That's everything you get with it right there. And I'll see you guys tomorrow.